Good evening. Anything that we discuss is going to be for educational purposes. I'd like to welcome you all to Digital Trading Floor. It's a platform where we disseminate financial data in real time to provide actionable insights. The purpose of making this video is to analyze Nifty options open interest data. We would be analyzing the index on multiple time frames and we would be framing a view for tomorrow, that is 8th June. Apart from the index, we would also be discussing our stock watch list. So let's start by analyzing Nifty options open interest data. So the max pain level for 10th June weekly expiry contract is currently at 15,700 level. So it tells us that if market was to expire at 15,700 levels on 10th June, in that scenario 15,700 strikes options, their premium would be worth zero, which means that option writers, they would be making profits, and call and put option buyers, they would be suffering huge losses, as if on market expiry majority percentage of options, they expire worthless. If we analyze the overall open interest data for 10 June weekly expiry contract, you will see that broadly speaking, highest amount of calls have been written at 16,000 strike, followed by 15,800 strike. So on the upside, based on the open interest strikes, resistance currently lie at 15,800 and 16,000 level. And on the downside, highest amount of puts have been written at 15,700 strike, followed by 15,500 strike. So going forward, 15,700 is likely support area for the market. And if you were to see what happened in intraday today, the change in open interest data suggests that today we saw open interest unwinding in call options, that are now in the money. So call options like 15,600, 15,650, 15,700, they saw their open interest reduce, which tells us that call option buyers of these strikes, they book their profits, and call option writers, they book their losses. And if you will see that highest amount of calls were written at 15,900 intraday today, and highest amount of puts, they were written at 15,700 strike today, which suggests that tomorrow 15,700 is likely to hold. And you will see that puts 15,400 strike, 15,300 strike, and 15,100 strike, those are out of the money puts. They saw their open interest reduce, which tells us that put writers, they book their profits, and put option buyers of those out of the money puts, they squared off their positions and booked their losses. If we analyze the index on multiple time frames, so on that you will see that on the monthly time frame, market is under control of buyers as it is trading above the monthly open, which is 15,629 levels. And today was start of a new week. So today's weekly candle as well as the daily candle are going to be the same. So above 15,725, which was today's open, market was under control of buyers on the weekly time frame as well as the daily time frame. So we had full time frame continuity to the upside, which means that above today's open 15,725 levels, all the time frames, larger time frames, monthly, weekly, as well as the daily, were under control of buyers who are aggressive in lifting the offers. And in terms of the price structure, we are making higher highs, higher lows, higher highs, and higher lows. So there should not be any doubt in one's mind that currently we are in an uptrend, and based on the price structure, we get the following scenario for tomorrow. Above 15,751, we can trade towards 15,773 levels. Beyond that, 15,799 and potentially 15,831 levels. And below 15,704 levels, we can trade towards today's lows, 15,678, below that 15,652, and potentially 15,620 levels. And if you would remember that highest amount of puts have been written at 15,700 strike, so which suggests that 15,700 should likely hold. But in the case it doesn't hold, we have given a scenario what is likely to happen if we break to the downside. And 15,678 is the low for the index today based on Nifty spot. So below that we can potentially see 15,600 odd levels on the index, and the neutral price range for tomorrow is going to be 15,751 to 15,704, in which one can refrain from making any trades on the index. Now we're going to be analyzing our stock watch list for tomorrow. The stocks that we have chosen are inside candles on the daily time frame, and those stocks are India Hotel, Axis Bank, and Canara Bank. You will see all other stocks as well. I would be sharing information regarding these stocks in our blog post, which I would be publishing around 9:45 p.m. So do stay tuned for that. However, we would be discussing only these three stocks at this point of time. Indian Hotel, it has formed an inside candle on the daily time frame, and will look for buying opportunity above 141.3 levels with a normal size, or will look for selling opportunity below 135.65 with half a normal size. Next stock is Axis Bank. We'll look for buying opportunity above 754 with a normal size, or we'll look for shorting opportunity below 741.4 with half a normal size in Axis Bank. And our last stock is Can Bank. In Can Bank, we'll look for buying opportunity above 162.9 levels with normal size, and below 160 level we'll look for selling opportunity with half a normal size. So these are the stocks that have formed an inside candle on the daily time frame, and inside candles are formed when there is an equilibrium between both the buyers and the sellers. So we'll look to establish a position if either side of the range breaks, and I will share that all these stocks are the stocks that I've mentioned over here. IB Real Estate. Basically, real estate sector is outperforming the index, so we would be looking for buying opportunities tomorrow in IB Real Estate. ONGC, energy sector, is another sector which is outperforming, and media sector as well is outperforming. So we'll look for buying opportunities in IB Real Estate, ONGC, PVR, and we'll also be looking for selling opportunity in HDFC Bank and ICICI Bank tomorrow, as private banks, they are currently underperforming the markets. However, you will see that these stocks are basically trading above the 5 and 20-day moving exponential averages. HDFC is below 5-day exponential moving average but above the 20-day exponential moving average. ICICI Bank is above 5-day exponential as well as 20-day exponential moving average. However, we would be looking for selling opportunity in these stocks, but since it would be counter trend trade to the short side, we would be keeping our position size relatively low, like we have discussed in inside candles. So like in uptrend, we'll look to establish long position with full size, and in an uptrend we'll look to establish a short position with half a normal size. So same way in HDFC and ICICI Bank, we'll look to establish short positions tomorrow if we get an opportunity, and those position size would be relatively small as it would be a counter trend trade. Finally, before ending this video, I like to summarize that tomorrow above 15,751 we can potentially trade towards 15,831 levels, and below 15,704 levels we can potentially trade towards 15,620 levels. And the broad open interest range for the index is currently at 16,000 to the upside and 15,700 to the downside, and the max pain for 10th June weekly expiry contract is at 15,700 levels. And our stock watch list comprises of Canara Bank, Indian Hotel, and Axis Bank. These stocks are formed in inside candle, so whichever side of the range they break, we'll look to establish a position in these stocks. And I would like to remind you that stay tuned for our blog post, which I would be sharing on Twitter as well as our WhatsApp group around 9:45 p.m. Finally, I'd like to thank you all for watching this video. Do hit the like button, share this video, and subscribe to Digital Trading Flow YouTube channel. Thank you.